Good day, guys. Today I'm going to be talking on top-down analysis. And for those of you that are new to my channel, my name is FXC, and I'm going to be documenting all all my trading process till that top point. Currently, I'm very profitable, so I'm going to be walking you guys through top-down analysis. Guys, this top-down analysis is what you need to know about, all you need to know and do about forex trading. This top-down analysis means I am analyzing from the higher time frame down to the lower time frame, even to the very point of entry. So without further ado, let's just get started. So this top-down analysis, we are going to start from the monthly time frame, analyze from monthly to the weekly to the daily to the 4 hour to the 1 hour and even downward. So what is the monthly time frame used for? The monthly time frame is used for viewing candlestick patterns. So what are candlestick patterns? Candlestick patterns, we have double top. Candlestick pattern, we have bullish engulfing, we have bearish engulfing, we have tweezer top, tweezer bottom. And let me check, is there a candlestick pattern in this pair? No, there's no candlestick pattern in this pair. So guys, all is there is candlestick pattern does not always form. You don't get to see candlestick pattern every single time. Okay, let me check another pair. AUDJPY, let me check. Okay, no. Okay, let me see. Let me check here. This. Yes. Oh, no. Okay. No. I can't find any candlestick pattern. But before I finish this course, I'll try and find a pair that contains candlestick pattern. So let's go back to our previous pair, AUDNZD. So since we didn't find a candlestick pattern on the monthly, let's scale down to the weekly. Okay, yes guys, this is the weekly time frame. This weekly time frame is very core. This is where you do mainly majority of your analysis. So this weekly time frame, that's where we plot our major levels, our trend line, our support and resistance, lots more. So I'm going to be starting with support and resistance. So I'm going to be telling you, I'm going to teach you how to draw your support and resistance. So yeah, okay, this is where our first major level will be. Okay, clone this, clone. Okay, yes, this is our second major level. Okay, clone. Yes. So guys, how I'm able to draw this thing is that this support and resistance is that you look for a place or places where there are clusters of candles. I mean, there are collection of candles. If you look at this flowing well, you will see that there was a cluster of candle here, here, here. So even if we go back to time, we'll still see that the market respected that level. It means there was more like a liquidation around that level, and whenever the market tends to reach there, because of the past liquidation, the market tends to get stopped or get weakened. It tends to get weakened at that level. So we have to plot it there. Let's check for another one. This second one now, look at here, 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 even here. So there was more like cluster of candle liquidation here. You see that when the market pulled down, this level rejected it, pull it down, it's pulled up again, this same level rejected it came here, it rejected it. It means that this is a very, very strong level. So what we'll check next on the daily time frame is trend line. So we'll draw a trend line on the daily, on the weekly time frame. But before we draw it, we have to first look at the market structure, the direction or the trend of the market. So for the market structure, we have what? Higher high, higher low, higher high, higher low. And what we know about higher high or a trend that is making higher high, higher low is that the trend is a bullish trend. So we have gotten the market structure or the trend to be what? A bullish trend making higher highs and higher lows. What we are going to do next is that we'll plot our trend line for extra confirmation, or to tell us, for us to know when the trend changes. So how we are going to draw our trend line is we'll connect it from a point, from the wicks of the candlestick, from wicks of one candlestick to the wicks of another candlestick. So when we plot it on the weekly, we'll then adjust it on the daily. So let's plot it. Okay, this is the week of one, and okay, these weeks, sorry, okay, let's adjust it on the daily. The weeks is not showing, is not forming well on the weekly. So this is the week of this week. So many forex traders make mistake while drawing the trend line. They draw it on the body of the candlestick like this. They draw it like this, but they are wrong. It's to be drawn on the wicks on the candlestick, so that when the trend changes, we are going to know very, very fast. So what we are going to do next is that we then plot our minor supports. Our minor support. What this minor support has to do is that since we plotted our major support on the weekly, so with the weekly where there are clusters of candlestick, the daily have to show us that there are also clusters of candlesticks that are revealed on the daily, or that occurs on the daily but are not seen on the weekly. Let's take for instance on the daily time frame. Okay, we have something like this here. So on the weekly time frame, because the weekly candlestick is large or is much, all these cannot be seen on the weekly. So we have to take into consideration by having a minor support on the daily time frame. So if you can look at this, we'll see that at this point is consolidation here, consolidation here, consolidation here, consolidation here, consolidation here. Even looking far beyond time or far past time, you can also see that the market reacted at these same points. So I'm going to map it out using our minor support. Let me show you. Okay, these are our minor supports. I'm going to teach you how to set up your trading view to look like mine, but that will be in another video. So no, yes. So if you look at it, the market came here, pull back, Abi, this level rejected it. It pulled back, it pulled up, or it went up, pull back into the same level. This level rejected it. It went up, came down here, went up again, come down. This level still rejected it. It's pushed up to the upside. Okay, after coming down, it came down, bam 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 bam. We tested this level, went up, come back to retest this level. This level rejected it. It went up, it's kind of consolidated here, consolidated here, came back here. This level still rejected it. That is to tell us that this level is a strong minor level, and as you can see, it after breaking it, it still retested it before pushing down to the downside. And you can see it here on this recent trade that is just forming. Okay, you can see here. Yeah, this level it went up, it came down, it went up again, so it rejected it here and here, trying to form some kind of a double top, a failed double top on the daily time frame. So this level, what this is trying to tell us is that this level is strong, and from what we've seen on this other side, at this point whereby it's broke and retest, it's most likely that this trend goes off, break it, and kind of retest it like this before pushing up to the upside. So for our 4 hours, our 4 hours is where we place our entry criteria like counter trend line break, retest, and so on. So let's go to another pair. We have AUD card. So what do we do in AUD card? Go from the higher time frame, from the monthly time frame. Okay, at this point, there is no candlestick pattern. Okay, at this point there is no candlestick pattern. Let's check. Let me check. This wants to look like a tweezer top. Okay, it wants to look like a tweezer top. But no. Okay, I can't find any candlestick pattern on the monthly. No, I can't find any on the monthly. Okay, I think I can find one. This is what an evening star. This is a bearish, indecision, and a bullish. Whenever an evening star is formed in a trend or on the chart, what that is trying to tell us is that there is going to be a trend reversal for the next couple of months. So as we found this, a bearish candle, indecision, and a bullish, you see that if the next couple of months, this month was what was bullish. This is an evening star. You can also find something like that, yeah, or this is a failed morning star. This is a bullish, indecision, and a bearish after it came down. It's kind of, this reversed the trend from a bullish to temporarily bearish, and it came here and formed some kind of a double top, but let's leave that for now. So okay, was there any form of candlestick pattern? Let me check. No. So let's go down to our weekly, where we go do majority of our analysis. So here is our weekly time frame. We analyze from the monthly down to the weekly. So this weekly, that's where we place we plot our major support or resistance zone. Our major support or resistance zone. We also plot our trend line and lots more. So let's plot our major zone. Okay, this is it. Let's see. Yes. So I plotted this zone at this point because if you look at it, starting from here, the market reacted at this level. Okay, let me increase a bit. The market reacted in this level, this point, at 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 this point. It's kind of, it reacted at this same point, at this point, even at this point, but it was kind of failed at this point. What is that trying to tell us is that you need to be careful of this level. You need to be very, very careful because of the kind of liquidation that occurred here. So what do we do next? We look for another level synonymous or similar to that. If I'm not mistaken, yes. So look at it. Even if you drag it down, so the market reacted here, kind of reacted here, kind of, it reacted here, and drag it. Market reacted at this point, it came here, reacted here, reacted here, reacted here, reacted here, reacted here also. And there is likely possibility that the market will still come and react in this point, probably break it and retest this zone. So where do we plot our third one? From what you can see, clone, yes. So this is our next major level. So the market reacted here, even if you drag it, you see it still reacted here, on other places. If you carry it back, market reacted here. This is a very strong major level. It's a very strong major level. So what else are we going to do? Let me drag it. We're not looking at the past, we're looking at the future. Okay. Then we look for the chart pattern. I told you that chart pattern, we have double top, we have double bottom, we have head and shoulder, we have inverse head and shoulder. And from this pair, what we can see here, we can see a chart pattern. That's the inverse head and shoulder. This is a shoulder, this head, and this is another shoulder. Okay, let me just map that out. Let me clone this. And a big head. So this is shoulder, head, and shoulder, and this is the neckline. This is the neckline. So this is a trend reversal pattern. It means as the market came and make inverse head and shoulder, what this is trying to tell us is that the next couple of weeks or even months is going to be bullish. It's going to be bullish. So this is from a bearish trend to a bullish trend. What next do we do? Let's try and draw our trend line. So I told you that trend line helps to know or helps to tell us when the trend has changed. So if it breaks above the trend line, it means there's a trend reversal. The trend is about to change. So we're going to see what I mean by that in this pair. Okay, let's start from the wick of one candle to the wicks of another. Yes, if you look at it, so this is a very good example. This is from high to low. So at this point, the market has been in a downtrend since when? Since February 2021, and just came out of the downtrend. Which point? At this point, this is December 2025. So what this is trying to tell us that as this market, as it broke past this candle, the trend changed. First of all, it has been in a downtrend. The fact that it sustained below this trend line implies that it has been in a downtrend. So we now have another chart pattern trying to tell us that this downtrend is done. Is about to change the trend from a downtrend to an uptrend. So this inverse head and shoulder told us that it's going to change the trend, and now it has broken above this neckline. So we have two criteria telling us that this trend has changed. First, a reversal pattern, that's the inverse head and shoulder, and next, or secondly, the trend has broken above the trend line. It has broken the trend line. So we have two different confirmatory remarks that this trend has changed from a bearish to a bullish. What then do we look for? We scale down to the daily time frame, and this daily time frame is where we come to plot our minor support and resistance, where the market reacted but not very visible on the weekly time frame. Okay, if we come here, we can see it at this point. Yeah. Yes. So if we look here, you can see something like this. Okay, this is the minor level. So this minor level, if you look at it, after breaking the major level, as it went up, this level rejected it, this minor level rejected it, it came down again. It went up, it came down again. It went up, it came down, it went up, it came down, before going up. So the market or the level, this level rejected it at this point, at this point, at this point. Even at this point, it still came here and rejected it here. It means that this level is a very strong level, and even if you draw it to time, you still see it that it rejected it even at this point. At this point, this trend tells us that this level is very, very strong. And if you come here, you still see that it's reacted to this point. If you drag it here, so it's reacted to this point. So this can be the reason it came here. This is the reason it came here after breaking above it. It still retested this level before going up. And guys, there's something that is very special about this minor level. This minor level, whenever the trend breaks above it and retests, there is mostly and after forming a strong bullish or a bearish candle, this is a signal that is going to go up. It's going to go either up or down depending on the candlestick that form next. So guys, you have to be very careful after plotting. Be very careful and observant after plotting our major level and our minor level. So if you come down, before our time frame is majorly for plotting our entry criteria. It depends, everyone has different entry criteria, but for me, mine is counter trend line break and retest. I'll be showing you more about that in another video. So let's go to another pair, AUD JPY. So what do? Go from the monthly time frame to check for chart pattern. So this chart pattern is not always common. It works, but it's not always seen all the time. So I will implore you guys to go and learn more on chart pattern. Okay, if you look at this point, no, we don't have a chart. Okay, yeah, I think I saw one. Okay, if I zoom it more, this indecision 1, 2, 3. Let me show you what it's called. This is what just formed. 3 white soldiers. Yeah. So it's the 3 white soldiers that just formed on the AUD JPY. And what this is trying to tell us is that the next couple of months or weeks, depending on when you will be watching this video, will be bullish rather. As we have looked at it, as it formed first, so these are the 3 white soldiers. Look at it. The next couples of candlesticks that formed indicate that it's bullish trend. It's now a bullish trend. So these are kind of things we watch out for on the monthly. So let's scale down to the weekly time frame. Okay, I don't need this anymore. So this weekly time frame gonna plot our major and our major levels and our trend line. So plot it. So for those of you that are having issues with major levels, don't worry, I'm going to make a special video on these indication tools, or these on these charts, or on these indicators, on how to use them specifically, how to plot your trend line, how to plot your major support and resistance, and several other tools. I'm going to do a special video on them in case you have a problem plotting them. So if you look at this place, the market reacted here, it reacted here, it reacted here, it came here, reacted here, reacted here. What this is trying to tell us that this place is very strong. It has a strong liquidity. So let's check for another place. No. Okay, yes. So this point, it's a very strong liquidity level because the market came and reacted so much at this point. This is more like a signal that something is wrong, or something terrible, something tangible happens or happened here, that the market respects this point, or based on what has happened in the past historically. If you check back, okay, I don't think there is, okay, yeah, if you look at it, look at this point. Yes. See, let me tell you guys, the market moves in pattern from zones to zones. So whatever happens, or whatever that might have stopped a trade, if you look back to time, you will discover that there is, or the market must have reacted at those levels or at those positions before, that must have stopped the market from moving either upward or downward. So where are we going to place our next support and resistance? Okay, let me plot it here. Though the market, though there is no historic or prehistoric history of this, but for the fact that the market came here and stopped, that is to tell us that something is wrong, or something significant, or something is so special about that level. So I just put it here because the market moved from zones to zones. So as it moves past here, it's most likely to come to this place, or to this 100% retracement. So what again? Okay, I'm done for it. There are still some here, but because it's not relevant to us for now, okay, it's reacted here, reacted here. So what are we going to check out for again on this pair, or on the weekly time frame? We check for candlestick pattern, and from what we can see here, we can see an inverse head and shoulder. This is the head, this is the shoulder, this is left shoulder, and this is the right shoulder, or yeah, either ways. So I'm going to just map it out. Yes, this is the head. This is the left shoulder, and this is the right shoulder. So this inverse head and shoulder is a trend reversal. So it means that this trend has changed from a bearish to a bullish and it has broken above the neckline. This is the neckline. This is the neckline and it has broken it. So what are we going to do next? We're going to plot our trend line. Told you on the weekly we plot it, we adjust it on the daily. So as we plot our trend line, where's the trend line? Yes, from one edge to another edge, from what we can see. Okay, yes, okay. So I told you this trend line helps us to know when the trend has changed, and from what you can see here, this is the first touch, this is the second touch, and now the market has broken above this trend line. It has even retested this zone. This trend tells us that since it broke above this trend line, the trend has changed. So we have two reasons why two reasons as to why this trend has changed from a bearish to a bullish. One, we have the market has broken above the trend line. It has broken the trend line. And secondly, the chart pattern, we have a trend reversal chart pattern, which is inverse head and shoulder, just like the same thing that happened in the previous pair. So what next? We go down to the daily time frame. Then this daily we look for minor support or resistance. Okay, there is no minor one at this current place, but let's go back. Let's check if we can see any. Oh yes, so look at it. It's from there, it's from there, it's from there. It stops. So this is a major or is a minor resistance. It's a minor resistance. So yes, so it's a minor resistance. It came down here. This level rejected, it went up. It came down, it rejected it, it went up. This same level rejected it, it came down here. This major level rejected it, it came down with a full force, it broke above it. As it was coming, it went up, come back, go up, rejected it, came down, it went up, rejected it, it came down again. Sorry, it went up, it came down, went up, came down. So this is a major or it's a minor resistance. What do we do? So at this point we then come down to our 4-hour. This is where we place our entry criteria. Should we check on up here? Okay, I don't want the video to be long. So thank you guys for staying tuned to the end of this top-down analysis video. For those of you that have not subscribed, please do smash the subscribe button. And for those of you that don't know me or this is the first time meeting me, once again, my name is FXC and I will be documenting all my trading career from beginner to profitability right on this channel. So just stay tuned, and whatsoever problem you need or whatsoever problem you have, just I'll be right there in the comment section. Thank you. Stay tuned for my next video.